Good set of numbers. Modest beat on both top line and bottom line for the third quarter, fiscal third quarter for Visa. Adjusted EPS was about 2.7% ahead of estimates. But I think what was really notable is all the underlying trends were pretty resilient. So 18% volume gains, 34% services revenue gain. I think, and all of that puts Visa in a very comfortable spot to basically meet their raised full year 2026 guidance, which they have raised to low end of mid-teens for EPS growth. I think what I'd highlight is it really was firing all engines. Value-added services was $3.8 billion revenue in third quarter, and Visa Direct, which is their consumer direct point-to-point money flows, their transactions climbed 21%, and new use cases and partnerships are kind of key tailwinds there. Sorry, one thing if I'd be remiss to not point out is the World Cup. It did really well for Visa's third quarter numbers, and management cited very strong volume gains across all categories. So all the US host cities, total card present spend accelerated, transactions were up 20%. You have to understand, like when people are visiting, and this is all cross-border spend, which is some of the most lucrative or higher margin business for the card network. Tap to pay transactions where people are going and using transit. So you just tap your card and move on. Your entertainment, your restaurant spend, all of that got a nice kicker. And the banks launched a lot of programs along as well to kind of bring in more consumers who were traveling for the World Cup.
Diksha, this is a dumb question, but are those buy now, pay later companies like Klarna competition for Visa? Are they friends or foes?
So here's how I put it, Scarlett. When I was covering banks, I actually thought the card networks are done with just because of all the alternative payment rails that were coming, direct fund, like bank to bank transfers were happening, and now BNPL is kind of growing. But if you pay attention, all the buy now, pay later companies, and I cover the sector, their best selling product is actually a card. So the card networks have very beautifully managed to embed themselves into the buy now, pay later ecosystem as well. So while you go to an Amazon.com and spend on, say, a firm there, a firm is now giving you a card that you can go and swipe at a restaurant for your buy now, pay later product.
So I'm looking at these stocks, Diksha, Visa, MasterCard, Affirm. I mean, on a trailing 12-month basis, they're all kind of flattish. What's the story in the payment space here?
I think the sector overall is beaten down overall. And I think if you just look at the card networks, they're somewhere in the middle of that range. The B2B processors are the worst hit. But I think the overall sector has kind of been doing poorly in that regard. That said, Visa and MasterCard are steady as they go. Like these are the most resilient, solid cash flow businesses along the sector that I cover. One thing, Paul, I would highlight though, and we've been getting a lot of questions around that, is the 7% job cuts that Visa announced yesterday.
Yep.
And people are like, is that a distress signal? Like what's going on? They're doing well, then why are they kind of letting people go? I would highlight that that's not Visa in distress. I would read it as modern corporate portfolio management.
Got it.
Visa's portfolio workforce actually tripled over the last decade. And what CEO Ryan McInerney is doing today, he's trimming product overhead and monetizing their AI investments.